Hi, welcome to the Market Alert for Thursday the 19th of November 2015. Now this is Monday's pre-market session, and I just wanted to show you something. There's a pattern evolving here this week. It's happened 3 times now, and in the pre-market session we've seen the market move up 100 points or thereabouts before the main session. So you can see there the market moving higher on Tuesday. Again, the pre-market session up 100 points, and then yesterday's session the market up 100 points before the opening. So there seems to be a new pattern evolving here, and I suspect the reason they're doing this is that they can move the market back to the all-time highs by using the pre-market session when there's less selling around. And this is why we're getting this sort of bit of volatility to begin with, of around 50 points, and then the market sitting sideways because there is too much selling around to move the market higher. It's just something that I've noticed, and again we can use this as a bit of a warning sign. So today, if the market moves 100 points higher in the pre-market session before the market opens, we can't expect a lot when it does, apart from the first half an hour, and then the market's likely to go sideways. So this is why the first signal of the trading session seems to be failing, is because the market's already made a 100-point move in the pre-market session. So obviously the big institutional investors have spotted an opportunity here to drive the market back up, collect the bonuses in January, and by doing so are leaving the afternoon session to the retail investors to buy and sell, which is why we're getting the narrow ranges. So something to keep in mind there. It's just something that I thought about this morning, wondering why the market's doing what it's doing, because the market does change and we have to adapt to that. But an interesting picture emerging there. So yesterday at what time have we got here? 3 o'clock. That was high impact news item, the mortgage or building permits, I think it was. Or was it out at 1:30? There was 2 housing ones out yesterday. So at 3 p.m. we had a sell signal. The market moved lower, and just like the previous days, you can see the market move lower and offered profits on several occasions, but would not go down to the scalp level, not enough momentum. And this has been a picture that we've seen again for the last 3 days. We then had the buy signal, which did exactly the same. It traded up 3 times, 4 times, but didn't actually quite hit the scalp because of the lack of momentum, because it's already been taken care of in the pre-market session, but nonetheless still giving a profit before we had the Fed announcement there. We then had the announcement, that was out of the way, and then we see the market moving, this time having enough momentum to actually drive up to the scalp level, and then eventually driving through as well. But again, just to reiterate, we've got this situation where the markets in the pre-market session is like this on the overnight, and then in the pre-market, when the European markets kick in, prices then start to move up 100 points in the range, which they have done now since Monday. So again, just be on your guard for that. This morning, before the market opens, if it's 100 points, then we could see the market moving sort of having an initial burst and then moving sideways. In the advanced mode, a lot of people keep asking for this, so I'm going to include it. We can see the buying coming into the market. We get the sell with the PTI triangle there. Again, you see the market coming down but failing to actually just hit the scalp target price there, and also happens to be the 17,500 level as well. And then price is turning around doing the same thing there. We did have a sell before we had the FOMC announcement, but as I said before, you don't want to be in the market when the FOMC minutes are released. And then again we have that same buy signal moving to the upside there. The daily chart, and I do like the advanced version of the daily chart, which we'll use from this point forward. There's a bit more on it, but it's interesting to see how the market was struggling the other day well, the other day would be Tuesday, and that's because the 200 moving average is in the way. And then yesterday you can see how they drove through this and moved prices higher. You'll also see that the market now is at the high of this bar, which is the 17,760, and this needs to be taken out to move up to the next target, which is going to be this one here. Let me just move that one there, and then we've got the 17,900, and then of course the all-time high as well. So again, you may want to make a note of these. If the market's struggling, that will be the reason why. In today's news, we've got Bubba speaking this morning. Again, these news items can move the market to the upside for the Dow, that 100 point that we've been getting. Also, Philly Fed at 3 p.m. That's the one to watch out for. We've got unemployment claims. They're just the weekly ones though, at 1:30, and then Lockhart's going to speak at 5:30 during the quiet part of the session, and Fisher's being wheeled out after the market closes as well. So we've got all of the Fed people out as well, and that's just raises a point as well. According to all of the news wires, mainstream or otherwise, yesterday, that it looks like Yellen is on for a rate increase. Well, as far as I can say is bring it on, because that will see the bond market collapse. Even the Telegraph yesterday had an article in it about the black hole of the bond market, the lack of liquidity and whatever. So if she raises rates even by 1/4%, which will actually be 100% increase, because that's what the current rate is, it's going to have a devastating effect. They've certainly painted themselves into a corner with regards to interest rates, so let's wait and see what actually happens. In fact, this is the irony yesterday, and I mean, you can't make this stuff up. All of the meeting minutes, when released inside of the detail, according to those that have read it and then reported on the internet, it indicates that Yellen is going to raise rates, and there is a couple of exceptions. And then it's what's known as a hawkish report, meaning bullish, and the market actually moved higher when she's going to actually increase interest rates, which should actually, in effect, be the opposite. So it was really bizarre. There's this disconnect in all of the data as to what should be happening in reality, and it's purely and simple. You just look at the daily chart, and all they want to do is to move the market back to the upside. We had some selling, followed by buying. We're back through the 200 bar average. We're going back up to the all-time high before Christmas, and that's a fact, or certainly before the 16th of December. It's the buy side. They want the market up. There's nothing now between now and December the 16th to stop it, really, unless there's something of a geopolitical nature that would do that. So finally, we've got the implied volatility, 1391 down from 1571 yesterday, so moving back down to the lows there. So again, bullish market at the moment. Doesn't matter, even if you've got the consensus and an FOMC report saying that rates are likely to increase. The stock market should go down because it means that you get a better return elsewhere. But no, the market's gone up, and like I say, there's a complete disconnect in the market to the economic news items. They're all bad. They're all coming out worse than forecast, and yet the market continues to rise, and that's because the market is owned by the Federal Reserve at this time. Right, that's it from me for today. I'll see you in tomorrow's edition of the Market Alert. As ever, thanks for watching. See you in the next one.